Murli Manohar, our panelist, is the head e-commerce India and South Asia Visa. Mr. Subhash Javaria, CEO and Managing Director, OS Retails. Mr. Satyen Kothari, Head Strategy and New Product, First Data. Mr. Rohit Bansal, Co-Founder and Chief Operating Officer, Snapdeal.com. And Mr. Vivek Nayak, Chief Operating Officer, Avenues India. Our session moderator, Mr. Naveen Surya.
Best to keep all of you awake, which we will definitely give it a best shot. The session format I was suggesting is that there are no presentations, so it will be mostly interactive discussions. It would be about 4 or 5 questions that we'll be asking each of these panelists. So my first question, Rohit, to you is, and of course I would expect other panelists to answer one by one, and I'll come across to them, is that we all know we are the largest cash economy, and cash is king. So is there a really play for digital payments in India? If so, then what do you think? How big is it according to you? Issuance as well as acceptance. If we can identify where and how he's using cash, you can really bring him together. Of course, there are multiple issues between all of us in terms of cost business model. So what's your view, Vivek, on these points?
Okay. I agree with most of the points that has been raised here. I'd like to focus on one side of the story which is very relevant when it comes to digital payments. And sure, cash is king and cash is great when it comes to regular use. We're all comfortable with it. But today, if I were to switch over from cash to another digital mechanism, there needs to be a very good reason why I'm doing it. And today, unfortunately, Indian industry has not been able to create enough value points in the digital space to be able to move people from cash to cashless. I have some retail numbers, okay? I picked up this, it's I think a couple of years old, but the number of small merchants, small and medium merchant establishments in this country, okay, how many? There are about 13 million, 1.3 crores of business establishments in this country, which is a fairly good representation for a population of our size, 1 billion plus. Okay, any guesses as to how many of this 1.3 crore business establishments are online? Anybody wants to guess? 20%? 30? Anybody wants to guess? Well, the figure is 0.06%. Shocking 0.06%. That's about 8,000 websites. Now imagine 8,000 websites for a population of 1 point something billion. Right? That's similar. And if you look at it, the bulk of that websites are actually in the travel space and in the bill space. Where are the shopping brands that we want to shop offline, online? Okay, the brands that you and I are very comfortable with and trust. Where are they online? Let's say if you take simple product category, let's say shirts. Okay, Louis Philippe, Arrow, Peter England. Okay, the brands that you and I interact with in the offline space. Where are they online? You can't buy those products online. Those guys are not live. So where are the value points being created by the brands that you and I trust on the internet for us to be able to go online and start shopping? Okay, travel and bills have done a fantastic job in building that space because they've brought real value, which is why we are going off on to online and shopping in those places. But the third sector, which is a very large sector, which is online shopping, retail, they have not been able to create that value. And the answer is simple, that there are not enough brands who have come online and they're not competing with each other and therefore they're not creating new value points for the consumers. As simple as that. Sure, it's not the only reason. There are a couple of other reasons in terms of education, like you said. Awareness about what can be done online. But the truth is, I asked somebody, have you bought something online? Not really. Have you bought tickets online? Yeah, I have bought tickets online. Why haven't you shopped online? I don't know. I don't have a credit card. Yeah, but how did you buy your air ticket or your railway ticket? Oh, I use net banking. So aren't you aware that you can use a net banking for shopping products? Oh, I never thought about it. So if the need is strong, then the payment option automatically becomes secondary. So we have to create that need in the marketplace from the consumers. Only then we can move towards making digital success.
So thanks, Vivek. I think instead of putting cart before the horse, I think we need to put horse before the cart. That's where Vivek is saying that we need to create the demand.
Hi, I'm Ruchir Punjabi from Langur. My question is actually for Vivek. Great to hear you're passionate about moving businesses online. A very quick personal anecdote. We're creating mass market products, and the first thing I did, because I'm not like my main business is in Sydney, so I just looked up online payment gateways. I went to CCAvenue. I put in all the details, and I got a letter of rejection with no interaction. Well, thankfully or not, I got a better rate after, and I've got a better business from that point. But there was no personal...
Excuse me, gentlemen, I think I would prefer your question to the panel rather than a specific issue with the organization. So free to take it offline with Vivek.
No, I understand.
Please come to a specific question for the panelists.
The specific question is, there are barriers of entry for a startup to get in. How do you resolve that barrier of entry? The example was leading on to that.
Okay, thanks. I understand what you're saying. If there is a barrier for a business to come online, right, then obviously the business will not grow. I accept that point. Let's put it this way. Look at it, take the clock back to about 8-10 years when we started a payment gateway service in this country, right? The banks through whom all payment processing has to happen were very clear about the kind of businesses they'd let go online. And the mindset of the banks were risk management rather than really business development, right? So the kind of barriers put up by the banks at that point in time, in terms of lien deposits, in terms of audits of the systems, in terms of checks, put off a lot of Indian businesses. Indian businessmen cannot operate in an environment where the entry barriers are so high. That's the reason why CCAvenue as a payment gateway came into being. What we told the banks is that, look, let us take care of all the KYC processes. Let's take care of all the business models that are acceptable to the bank. Let's make sure that we play a responsible role in terms of bringing in and encouraging merchants to come online. And there are certain business models which are systemically risky, which can't be handled and which can't be taken on, right? So this shifting gets done, and banks often get into this process of checking what the business model is of the person, and then the business gets approved. So in this context, largely business models which are positive and forward-looking, and believe me, Indian standards are not really as low in terms of its, entry barriers as it is in the West. We have a fairly liberal process in terms of, accepting businesses online. But often some businesses online do not meet the risk parameters of the banks, and you have to be, say no to. But largely, it's fairly open and clear in terms of what gets approved as a business model.
Can we have a mic? I would like to hear a perspective from Vivek on that, because he has experience with all the payment gateways, and probably then on Rohit on the consumer delivery side.
Okay. Yes, there are failure rates, and yes, the ecosystem is still developing. But something, we are much better off than a lot of Western countries. The kind of options that a customer has in India is probably the best in the world, right? I don't think people in the West have the kind of options that we have here as consumers today. In the West, if you look at it, what do you have? You have a credit card, and you probably have an ACH payment mechanism to pay online. Look at an Indian. An Indian can have credit cards, debit cards, net banking, cash cards, mobile payments, and even cash on delivery as a method of payment. That's a huge bouquet of payment options that an Indian has. Yes, a lot of them don't know that this is possible. Only when they start coming online and doing transactions, that's when they realize that all these options are available for them to do the transaction. We are not, bowed down or weighed down by legacy systems that a lot of other Western economies have. Today, if you look at the depth of penetration of payments as a medium, the opportunities are immense. A farmer sitting in Tamil Nadu can go into a Tamil Nadu cooperative bank, get a zero balance account by showing his ration card and have an internet-enabled debit card given to him, right? And he can, if he has the will to do it, he can come online and do transactions and pay for it from his bank account. That's the depth of penetration that payments have had in this country. Now, the price you have to pay for that is, we're talking about 40 banks or 45 banks who have enabled the systems to be paid online. So you have to connect to those 45 banks. You have to connect to those cash card systems. You have to connect to those mobile systems. And these connections, come at a price, yes. But the truth is, ultimately, if the business has to grow, it is by giving the choice to the Indian consumers in terms of a method to pay. Because each payment option has a character of its own and a reason of its own. A customer has his own reasons for choosing one over the other. To grow the business, we have to give him everything. And the price we have to pay is, yes, some of ecosystem issues which will get better and better over time.
Could you share some numbers on different payment methods and their use?
I'll ask Vivek, since he has all the options on his gateway, he can probably give you some breakup and some macro statistics.
I'm sorry, I don't have it offhand, but let me just point the trends in general. 10 years ago, when the industry started off with some significance, credit card held the largest share of the online transaction. Over the past couple of years, the trend has reversed. The credit cards today hold a smaller share of the overall transaction base. Net banking and debit cards as a method of payment has become the most popular one, followed by cash cards. And mobile is still yet to take off as numbers, but once it comes to its own, that itself is going to become another significant thing. It's a very dynamic kind of a situation in terms of the numbers. Okay, some of the models that you mentioned, I think PayPal and you think about it, I think while a successful business model abroad are a good thing to look at, the copy and paste model, I don't think it really works, because you have to look at every market for what it's worth, and each market has its own unique characteristics and the way the consumers behave in those markets. So, picking up a solution and moving it here obviously is not something that is likely to work. Let's say PayPal, for example. I think one of the biggest plus points of PayPal is that, hey guys, you got a business idea, you have a bank account, okay, let's go online and start selling. Do you imagine in a place like India, which is, under threat of terror all the time, you think Reserve Bank of India is going to allow something to go online without a proper KYC process or a complete documentation of the merchant and the way the funds are moving? No way. So applying a minimal KYC process to start off an online business in a country like ours is not really feasible. Let's say M-Pesa. I think M-Pesa, right? That's the model where it's a cash card kind of a model where, people carry cash within this thing and transfer funds P2P. Here again, I think that's running in Africa, if I'm not mistaken. I think from what I read, there's a fear among the villagers to actually carry hard cash because of law and order issues. So that's where the entire advantage of this cashless card comes in, right? I mean, we are fairly honest as people. I don't think we really have to worry about, a farmer carrying a certain amount of cash and going to the bank really has to be worried. I think it's the unbanked that these applications probably will work for, where, cash is the currently primary medium of being paid. Picking up a solution and bringing it, I have one example for it, which ultimately it comes down to planning the thing right for the market, understanding the market, planning it right for the market, and then executing it perfectly. There's this Go Mumbai card, smart card, if you're familiar with it. I think when you're traveling by Indian, Central Railway, there's this prepaid card which you tap when you go into the boarding station, and then when you tap out again when you get back, alight at the station, and then the fare gets calculated and the card gets debited. Great model to work in a city like Bombay where, people don't have the time to, stand in queues to buy tickets. But, there's a monthly pass which I buy once and then I can use innumerable number of times up and down and nobody will ask any questions. It's a free-flowing kind of a thing. It doesn't add to the processes. Here I have to tap my card at the boarding station, and then when I forget to tap a card, when you get off, then the full, the maximum fare that is applicable gets applied on that card and debited, right? Hey, this is a step backwards, right? It's not adding to my process. It's actually adding more work for me, and it's giving me some tension because I'm supposed to pay only X amount for that travel. Why am I paying that much more? Just because the systems are not, working right. So whatever application has to come in has to value add to the customer and make it more convenient, right? If new models that get applied in this country, match the expectations of a customer and provide him that convenience that he's looking for, I think that model will work. But a simple cut paste, well, I'm not so confident.